Hello traders, this is Rich from Tradesight. This is the market preview for Thursday, April 24th, 2014. We kind of a soft day today, with definitely the real brunt of it being felt by the Nasdaq, the NQs, which were in the process of a rebound. That rebound has ended. Downside was definitely the stronger side today. We had a couple of Dow components that reported good earnings, and it takes a couple of the high dollar Dow stocks to really kind of buoy the whole thing. So really the market was sharply bifurcated, with the broad market side holding up and the Nasdaq side being weak. The advanced declines on the Dow side were, in the New York side, were about flat. But on the Nasdaq side were minus 1,000 issues. So not only was the market weak price-wise, but the market was weak on the Nasdaq side internally as well. Here's like the ES futures, just grinding around this 1875 area like we anticipated from the previous report. That's definitely going to be a pretty good headwind. We're only 5 bars up now in this move to the upside, so there is definitely, the door's open here to get into this plus 1/8 level before we run into any kind of trouble with the current bar count. So that's going to be the target if we do resume to the upside tomorrow. The next level above that is going to be the risk level. That's going to be pretty important here. And don't forget, this is a level that not a lot of other traders are going to be privy to. They're going to be caught in that sweep above the previous high, thinking that we're just going to blast off, and that's not going to be the case here. If we do roll to the downside tomorrow, the 7/8 level is where that 10 EMA comes in, so that makes that 7/8 level, which is a minor level, more important. So 1859, 1860 area is going to be important to the downside if we do take that direction tomorrow. On the Nasdaq side, we were weak today, turning back down and filling that little bit of a gap up that we had. If we do resume back to the upside again tomorrow, the day's high, and then just above that, the 4/8 level at 35.93 is going to come into play and be the one to watch. To the downside, that 10 EMA is going to be a little bit of support, and then more important support at the 2/8 level. MACD is positive in the on the Nasdaq side, and that's a relatively fresh cross. So we definitely could get some a lift here all the way up to the 0 line, which would probably put us right in line here with the 50 DMA if we do continue to the upside in the coming session. TLTs today were fairly strong, gapping back up above this little 2-day range. So they definitely are in the midst here. We got to be a little bit careful here that we don't wind up with kind of this expanding pattern where we have higher highs and lower lows that continue as volatility expands. If that happens, we're probably going to wind up reaching this 8/8 level in a very kind of a very funky fashion, where it's going to be tough to stay on the trade. But definitely keep an eye on the 15-minute ranges in all these derivative trades, TLT, GLD, all of them. For the next couple of sessions, or at least for the rest of the week. Here's a look at the 10-day trend, which remains relatively elevated. We're at 1.18, just below the 1.20. So there's a lot of room to go before we get to the 0.85 overbought threshold. That'd be the market moving higher. We're a little bit closer to the oversold threshold. So if we do head down, we could get to the oversold area of 1.35 probably this week if we did take that direction. So definitely be aware. There's room to go in both directions, but certainly the room to the upside is much greater than the downside right now. Here's a look at the NDX S&P cross. It was obviously really weak today because of the underperformance in the Nasdaq. We're still basically at the midpoint here of this regression channel. What we need to see is if we can hook up a higher low here. If we do take out this prior low, that's going to be really bearish for the overall market, meaning that that this little kind of move to the upside is really just rotational in nature, meaning we've got to take from A to add to B, take from one stock to add to another, meaning there's no net money flows, really just selling Peter to pay Paul. So keep an eye on this. If this starts to curl up to the upside, that would be a really good positive for the overall market, but right now that's not happening. We've got a lot more earnings to come, and that could definitely influence things, and this can move pretty quickly. But I really need to see it start to roll back to the upside here and not lose this midpoint. I want to take a look at the cumulative advanced declines. On the top chart, we've got the New York Stock Exchange side, still pretty positive as it's been. Today was just kind of a resting day, but we haven't recorded new highs recently. The Nasdaq side is a much different tale. this little top right here, if we can exceed this to the upside, that would be really positive for the NASDAQ overall. Even on the bounce days, the breadth on the NASDAQ and the volume has not been great. So really need to see this start to move back to the upside. Until that happens, the NASDAQ side is still kind of suspect. But if we do take out this most recent high here, that would definitely be a welcome positive for the bulls. All right, now here's a look at the individual sectors ranked from best to worst. The defensively minded XAU was a top gun. That was the source of funds yesterday. Today it bounced back to the upside. The airline index, which is a late cycle sector, was also pretty strong. Then we had a fairly decent performance relative to the broad market by the OSX, which is definitely a pretty good positive. Transports really just performed with the market, didn't do too much today, so I want to see the transports hopefully build on that tomorrow and pivot to the upside. Maybe if especially if the oil services or the OSX takes a break. Utilities were middling. The XOI would have been nice to see a little bit higher on the list, but we didn't get that today. The semiconductors were fairly weak today, underperforming the broad market, but actually outperforming the NASDAQ. The BTK is where the real damage was done on the NASDAQ side of the market. Some of the big leaders like Amgen and whatnot were down quite a bit today. Amgen is going to be sticky at that 112.50 area, which is a big Murray math number on the chart. So keep an eye on that. But in the face of things, the BTK was down, let's call it 1.5% today. It was up 3% almost yesterday. So it's still holding up fairly positively on this little bit of a rebound, but I do think it's more of a rebound than anything else. Just really want to see the other late cycle stuff kick in, the airlines, the oils, the gas stocks, transports. Really want to see them start to pick up here, and even some of the housing stocks as well. Here's the XAU, which is turning back to the upside here. Got to close above the 10 EMA. 1 day up on the new flip here in the bar count, so definitely keep an eye on that. If it does proceed to the upside here, the 7/8 level could come into play. The XAL was also fairly positive on the day, tagging at 8/8 level. Only 4 bars up now, so there's plenty of room here for this to ride up to the overbought territory above the 8/8 level here in the Gann box. And note that the MACD never penetrated the 0 line and also held the 50-period moving average in price. Semiconductors, kind of just an inside measuring day. Really didn't do too much. We're only 4 days up here. If this does want to continue to the upside, this static trend line here that's actually coming at range high could easily come into play. To the downside, we've got the 10 and then the 50-period moving average just below to support price if it starts to roll to the downside. Here's a look at the BTK index, which I think is really important. Up 3% yesterday. If you include the gap, down 1.5% today. Not quite an outside day down, but definitely a negative candle there. This could bounce back up to the 6/8 level and interact with that 50, but I really don't think that new highs are probably in the cards here. I think they're going to start looking at some later cycle stuff here, and probably move, start to continue to readjust their allocations here on this stuff. So I wouldn't get too excited about this particular chart, though it could be volatile and have some very, very sharp up days along the way. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.